2020 is going down as a landmark year in history and in our lives. With all that it brought, good or bad, it changed a lot of things. The way we work, the way we meet, the way we spend, and the way we save. Our personal finances and financial planning have also had to adapt to newer ways, thanks to majorly the coronavirus crisis, which lingers on. But more importantly, the year is leaving us with crucial lessons about money. So, in this video, we give you a rundown of our top expert takes from this year. These tips will stay with you throughout your lives. This year in October, the health insurance sector got more consumer friendly as per IRDAI's guidelines. Less scope of cover rejection, coverage of many modern treatments, transfer of benefits, and much more was announced. But has this come at a higher cost? Let's hear it.
The healthcare system, which is not regulated, means that medical inflation cannot be controlled. Now, IRDA has taken out of guidelines which are very pro-customer, of course, right? It's adding everything that wasn't earlier there. But there is a cost implication. It's limited to 5%. But I think it brings out the point that, while of course we'll be paying a little more, but we're also covering a lot more.
Talking about health insurance, choosing a cover is always a tough decision. You must keep these three factors in mind.
So you got to think through what you're buying. Broadly speaking, there are three factors. There's the product features, there's the claim settlement ratio, and then there's the premium. In the way I think, I normally give 40% weightage to the product features, and I give 30% weightage to the claims, and the balance, that's 30%, is left to the price, the premium.
IRDAI has also included mental illnesses in the health insurance arena and mandated insurers to provide such covers. Here's a glance at them.
So if because of a mental issue you have to be in a hospital, perhaps under observation or under medication for some time, then the entire hospitalization cost is borne by the insurance. So counseling and therapy is covered in two cases. The first is if you have a plan with an OPD cover and that allows counseling costs, then you can cover it there. The second situation in which counseling cost is covered is if you are hospitalized for some issue, then the rules are that any outpatient expenses incurred 30 days before you got hospitalized and 60 days after you came out of the hospital are covered as part of the insurance.
As of now, mental health does not fall under the critical illness category, but going forward, we can hope to see inclusion on this front as well. Now, the importance of life, health, and motor insurance has been emphasized enough an ample number of times. But did you know about certain exotic covers that exist and are just as important? Here's more about them.
People should go in and buy insurance such as cab ride insurance, laptop insurance, pet insurance, simply because they offer a very wide coverage at a very low cost. Renters insurance. This policy covers the replacement of stolen or destroyed personal belongings. Not many people are aware of this. You also have something what is called a disability insurance. The aspect which is ignored for this policy is that this policy replaces the income portion of the insured if he or she is not able to work due to some injury for a specific period of time. So like you're bedridden and you can't work, then it covers you for the loss of income during that time. You have something called a laptop insurance. The reason to get this insurance is that it covers financial losses due to theft of your laptop as well as damages to the laptop, that may take place accidentally or otherwise. The fifth one that I would like to mention is the trade credit insurance. This insurance protects the traders, manufacturers or service providers by covering losses due to non-payment of commercial trade debt. So if you have, creditors and then they don't pay you, then the insurance company steps in and makes the payment to you.
Surprised that you have this plethora of really useful covers in the market, right? Talking about markets, it has been a roller coaster ride this year for the stock market. With investment corpuses and savings diminished, savers have had a hard run. Add to this the scenario of job losses and pay cuts plenty. What should one do to save and spend? How should they go about the activity? Here's what our expert had to say.
You should have comfortable cash flows. And since you're thinking or seeing a situation may arise of pay cut or layoffs, you should have a good contingency fund which is equivalent to 6 months of your regular expenses. That is one. Another important one is that we are thinking about such a distress coming in future, but we continue with the discretionary and lifestyle expenses going on. I think the point is that you should reduce on that significantly, save more for the rainy day.
Times of crisis generally make investors flock towards traditional investments such as real estate, gold, etc. So, what should your asset allocation in such times look like? Here's the math.
I think the core principle of investment has to be asset allocation, which is derived on the basis of your age, your risk appetite, investment horizon. A common formula, which is an easy one to be used because people think asset allocation is a very complicated exercise. 100 minus the age can be an equity portfolio. So suppose someone is 30 age of 30, then at a very macro level, you can put 70% in equity and 30% in debt, or 20% and 10% in gold.
Equity market did not shine in 2020, but gold certainly did. We saw the yellow metals price rocket, making it a very attractive investment class. Here are some useful tips on investing in gold.
When there is high uncertainty and you want to increase kind of a slightly higher allocation to gold, you may, but don't go overboard. It could be cheap. It should be not exceeding 20%. But that, if you want to redeem, I think in 2 to 3 years or 3 to 5 years time frame would be a good time for you to have that tactical allocation. But otherwise, we'll recommend that you have a 10 to 15% allocation at all times. Jewelry is the most inefficient form of buying gold. It is very, very inefficient because there are markups at all levels. There are making charges. When you sell, you don't get that making charges that you have paid. Plus, you have to take discount on the gold, prevailing price of gold when you go to sell. So it is very, very inefficient form of buying gold.
Investing in gold can help, but selling it can also help, especially when you have to tide over a financial crunch. If you wish to tide over a cash crunch, you can monetize idle gold or take a loan against it. Do check out our video on the same. Another asset class that became very appealing due to plummeting prices was real estate. The realty market, which was already in a bad shape, was further hit by COVID-19. Moreover, home loan interest rates went to all-time lows, making financing easier too. So here's what home buyers should remember from the episode.
Your EMI should not be more than 30-40% of your take home. And certainly do not factor in next year's raise or this year's bonus or such other item like that when you take out that loan, only because the rates of interest were low. So I took out a large loan. Work out on the EMI.
But you have been victim of a job loss or pay cut. Listen even more carefully.
Don't borrow. If you don't have an income stream, I won't even say the decision is up to you, because if you're not able to establish an income stream, you're going to be hard pressed to find a lender. Which bank or NBFC is going to give you a loan if you're out of a job?
Now, what about property as an investment? Should you up your allocation to it?
I don't think that one takes long-term decisions, with respect to, one event. So one wouldn't adjust, like the distribution of your wealth over different asset classes. You wouldn't take COVID into account.
While on the topic of home buying, we urge you to watch our video where we tell you about the frequently used terms and concepts and jargons by builders while explaining housing, so that you don't get misguided or fall prey to ambiguity. In the loan space, this year has seen a major COVID booster in the form of interest moratorium on EMIs. Further relief came later this year when an interest on interest waiver was also announced. However, one key point should be kept in mind by borrowers, even those who did not opt for the waiver, and that is
interest on the principal is actually a fairly large sum. So if you see some of the earlier work we've done and you've done, by not paying 6 EMIs during the moratorium, you could end up paying 20 to 30 extra EMIs at the fag end of the loan, right? So don't think of this as a waiver of interest. I'm strongly advising anyone who's listening, try and make a bullet payment of 120% of the moratorium you utilized within 12 months to bring your outstanding principal in line.
When it comes to loans, paying them off can be a real challenge, but you can use a few strategies to do so, namely debt snowball repayment strategy, debt avalanche repayment strategy, renegotiating terms, considering the tax benefits and implications, and making cash flow adjustments. To know more about these, check out our detailed video on the same so that you can go on and become debt-free. And that's the recap of 2020 we want to leave you with. Stay tuned with us to start your 2021 on a healthy and wealthy note.